Hello, everyone. Welcome back to our live stream conversation. I'm Dave Stoffaker, Senior Credit Trainer with Lenders Online Training. You may notice that I'm flying solo today. Linda Keith, my colleague and Chief Training Officer, is with us in spirit, but she's out attending a personal matter. So we're thinking of her. For this week's live stream, I'm going to focus on fraud. Now, while fraud should always be on our radar, especially as a lender, credit analyst, I think it's our responsibility. I mean, when borrowers are stressed through economic uncertainty, and I think we can all agree that some uncertainty is in the air, I think we need to pay a little more attention to that area. So I thought it was a good time to talk and revisit about this fraud triangle. Some of you may know it, some may not. I may then expand it to a fraud diamond, slightly different shape, and consider what in tax returns or financial statements from our borrowers that we see, what type of clues might indicate that some fraud opportunities exist. First, I'm going to talk about a fraud story that impacted a lender. Then I'm going to jump into a discussion of the fraud triangle to ensure that we understand all the elements that exist for fraud to be defined. Then lastly, some clues that I believe that will help you spot within the tax return, whether it's financial statements or documentation from your borrowers, and maybe there is some fraud elements that might be existing. So first, let's begin with the story. This is a parts manufacturer, a custom metal parts manufacturer that had an existing revolving line of credit, a sizable one at that. Now, they also had some other borrowings with their bank. The line of credit had some advances that were governed by a borrowing base. There were some receivables. They were allowed to advance up, I think it was like 80% on those receivables within 90 days. There was inventory, some value there on raw materials, fixed goods, finished goods, that is. They could borrow 50% on that. So it was kind of standard stuff. However, the company had done some things that probably were fraudulent to secure more working capital funds, much more than their legitimate collateral value allowed. For example, they inflated accounts receivable. They were submitting a borrowing base that showed some receivables that were actually higher than actual. Now, in this case, it was about $300,000, give or take. Now, that was greater than actual, real, or collectible ones. They fabricated some invoices on orders that had not been shipped, been canceled, some to what I would say affiliations. And to make matters worse, they actually manipulated their inventory. The categorization of their inventory, they moved some WIP, work in process dollars, to finished goods. See, finished goods are much more valuable to a lender, right? They manipulated their accounting system. They gave the bank a false impression that they actually had more assets to lend on. Now, as a result of this misrepresentations, the company was able to borrow more money than they actually had collateral for. Now, unfortunately, as time progressed, operating issues, challenges continued, quality issues continued, order cancellations happened, and there was some misappropriation of personal funds. All this was too much to overcome for the business. It later defaulted. Some legal process happened. They ended up and filed bankruptcy. The bottom line, it wasn't good to everybody, and definitely not a great ending to the story. Now, fraud exists in every industry. I don't think it's specific to a certain sector. You'll come across stories that exist throughout various business types. Construction industries where down payments are paid in advance to put placement on the schedule. Sometimes those monies are used because there's debts chasing them behind on prior projects. Sometimes construction companies or other heavy equipment companies will sell off some of those general business security assets, where we wrap everything around. They sell those off. Those aren't necessarily on equipment listing. We lenders sometimes don't know that. And there's the restaurant industry, hospitality. Sometimes those are cash-based businesses. Sometimes there's some disparity in the income reporting and the actual cash activities. Bottom line, fraud exists today. So let me talk a little bit about fraud and the elements that define it. Now, I'm going to share this based on a conversation with Linda, my colleague. You might have recalled in prior live streams, or if you attended our Lenders Online training, she's a CPA by trade. She's done many audits. And some of those audits, or most of them, I should say, were under the guidance of it was the statements of audit standards. Those basically were helping you to understand how to detect fraud. I mean, it was serious stuff. Actually, that's where the fraud triangle was introduced. Now, from my banking background, my manufacturing, business advisory background, I would contend that if we're dealing with lending to small and mid-sized businesses, or even farming operations, let's not leave them out. I think you're already dealing with two elements of that triangle. First element is opportunity. Can the individual that actually is providing us information provide us misinformation? I mean, with small to medium-sized businesses, opportunity is always in play. We see company prepared financial statements, QuickBooks. We see CPA prepared statements, likely not reviewed. But if you come to think about it, unless the borrower is actually submitting us CPA statements, maybe an independent CPA that is providing reviewed statements or audited statements, there's no assurances. So let's go to element number two. I like to see this as incentive. What do I mean by that? Is there a need? Greed. Are they desperate? Well, in today's business, if a business is challenged or having financial difficulties, maybe it's because of tariffs, maybe it's supply chain issues, maybe it's just loss of markets. Perhaps their personal spending power, their lifestyle is going to be probably challenged. They could become desperate. So, as I said here, we can probably assert the first 2 points of that triangle as element of fraud that actually exists today with the businesses and borrowers that we deal with: opportunity and incentive. However, we can't lead to fraud unless that third element enters the picture. What is that? Rationalization. Would they do it if they could? I mean, it's all about character with this one. If the question is, would they do it if they could? Well, if we can get to the answer of no, that they would not, then we feel a little more comfortable. A couple of weeks ago, I did a virtual session on Lenders Online. I do 8 of those. One of those, and this one was specifically on the C's of credit, tax returns. So basically, when you're thinking about characters in tax returns, are there any clues that might enter the picture? Well, we think so. One would be if I took a deduction with maybe knowing it's not legit. Maybe I'm using my car for personal reasons, but I'm writing it off. Maybe I'm writing off vacations, probably stuff that would be negative with regards to tax. That might not be great for a character builder. Maybe I'm disclosing some dishonest activity. Maybe I'm cutting corners in my tax returns. Maybe I'm not reporting all my income sources, cash or barter. Likely that's a negative character issue. Alternatively, let's be on the positive side. Maybe I'm reporting stuff that the IRS doesn't even know about. Maybe it's gambling. Maybe it's tips. That could be a positive character. How about contributions? Well, with this, I'd probably be a little subjective on it. Just because I'm willing to donate money and contribute, which is a good thing, right? Doesn't necessarily mean it's overall a high character position. I recall one of Linda's comments. It resonates with me today. In the context of character, she said it doesn't mean that the individual is helping someone elderly crossing the street. Doesn't mean that they tithe the church. Doesn't mean that they're nice to their friends or families or dogs. What we're interested in, would they be okay if they were actually misleading someone for a financial gain? So would they mislead someone for financial gain? So three elements that are necessary for the accusation of fraud to exist today. Let me introduce another one. This is the fourth point of the visual. We're not a triangle anymore. We're going to a diamond. The fourth element is capability. Think of it as a skill set. Is the person who actually is involved in this Do they have the capability of doing it? Do they understand financial statements, tax returns? Would they be able to understand them enough to purposely complete it incorrectly? Then, if they did make the thing, can they make those changes and keep them consistency throughout the whole time period? If they're going to increase revenues, are they also going to increase cost of goods sold? They kind of move together at times. Then, can they actually keep the lie for a long, long time and repeat it under duress? It takes effort. It takes a lot of effort when you lie and you got to continue that lie. So we have four elements of fraud indicators. How would we look for them? Let me share you some ideas. Maybe we'd call them tools that would be worthy to add to your lender's fraud toolbox. Here's a few that I use today, even as a business advisor. First of all, I review full financials. I look for trends, deviations, major changes that go out over a year. Honestly, I prefer a rolling 12-month year, whether it's mid-year. I want to see what happens because I think over time things smooths out or anomalies actually stand out. If they're moving with consistent to maybe their business sector, maybe the environment, global economy, that might be a good thing. But if they deviate, I'm going to put a flag on it. I like to calculate metrics. I like to look at KPIs, indicators, key performance indicators. How do they relate to their peers? Now, you can get some industry resources. I like SageWorks. Some people use RMA studies. But I scan them for anomalies. What's different from their peers? Maybe that might be an indicator. Thirdly, I like to visit the company. I like to go on site, tour the facility, maybe talk to different levels of the corporation and just, ask questions to other people within the business. Most of all, I'm observant. You can see what their equipment's like. You can see if their inventory is maybe missing or it's just disorganized. You can find those things out by a site visit. When I used to do floor plans, I had to go on site on a regular basis. Here's a few tools that Linda brought up. She likes to look for consistency in tax returns and financial statements, as well as any type of printed materials. Maybe it's brochures, maybe it's websites, maybe it's social media posts. Is there things that are different, that are just not consistent? You can pick up on those things. Lastly, she mentioned, if a borrower has an excuse or something of reason to your question, let's give them the benefit of the doubt. But if it's very complicated and an explanation, have them write it down. Maybe actually have them put it down in writing and sign it, because likely their explanation is going to be much more elaborate than yours, but they signed it. They may not lie if they have to sign that. So let's wrap this up. In summary, fraud will continue into the future. There's going to be stories that continue to be written about fraud. Big companies, small companies, big city markets, small city markets. No boundaries. I think if there is a common participant here, it's people. We're flawed. I want to thank you all for attending today. I hope you found today's session insightful. And we shared some key elements that are needed to define fraud and what leads to fraud accusations. We offered a few suggestions, some insight. I think the key is awareness, your awareness. Be diligent. Build your toolbox. You'll see at the bottom of the screen, we have our email address. Let's continue the conversation. I love it. 3 things to put on your mind. First of all, I'd love to hear what's in your toolbox when it comes to fraud. Maybe if you could share some interesting stories. Now, please be confidential. I understand that. But I'm curious on how fraud may have impacted you or even in your community. The other thing, ask questions. Our live streams and blog posts are filled with questions that you have provided. We enjoy that. Linda and I love the opportunity to ask those. Lastly, give us a call. If you're curious about Lenders Online training, what we can do for you to help you in your training, help you to get to yes, to help you build your customer base and understand tax returns and financial statements, we would love to help you. Lastly, I want to thank you again for attending today. Look forward to it. We'll see you in a couple of weeks and have a wonderful week. Take care, everybody.